Welcome everyone to HueFin, also known as HueFin News. Today's February the 20th, 2021. We're going to give you all a top bio stock that we may actually add to our simulated portfolio. And also we're going to go ahead and look at our simulated portfolio to see if we need to get rid of some of our picks and even add this top bio stock to the portfolio. Before I go into that, if this is your first time watching our video, make sure before you go, hit the like button, share the video, also subscribe to the channel. We're here to show you that you're able to also pick some very good products into the market to increase your portfolio. So let's look at these particular picks right now. You guys can see here it is. We closed some of our last picks on our last portfolio review that we did, right? The one that we closed was Tech Standard Group Holdings. You guys can see we closed that. We closed it on the 13th of February of about 12 and a quarter or 3/4% profitability. In that one, we also went ahead and closed out our quad graphics. You guys can see right here of about 24.1% there. And then we also closed Sprouts Farmers with a meager 1.1% profitability in that particular trade. Now let's go ahead and look at these other ones that we still have on, okay? US Silica Holdings, let's go ahead and check that one out real quick to see if we need to get rid of it. The ticker symbol is SLCA. And here it is. You guys can see we played some of the strength into the market in US Silica Holdings. Let's change this over to the weekly time frame. And we saw a massive movement to the upside last week, right? The market in US Silica Holdings came all the way up there towards $12. Closed around $10.62. Do we need to keep it on, or do we need to maintain or get rid of it? Because right now, according to tip ranks, we're up 7.8% right now in the market in US Silica Holdings. Okay, so yes, there is some weakness coming through into the market in US Silica Holdings. We're going to hold it out just a little while longer. We would definitely let this go though, seeing this market break price below $10. All right, so we're 54 cents away from that. We're going to hold it on just a little while longer, something that needs to be watched. Now the next one that we're going to talk about is Calera. Okay, let's go ahead and look at this particular market and see how the market has fared since we added it to the portfolio. So even here in Calera, you know, the 3 weeks time frame, the market has seen some increased volatility. We have seen some increased volume, and the spread of each of these 3-week price bars are very wide. But you know what? The market here in Calera is not trying to break. It is not trying to fall. As a matter of fact, we saw earnings come through on February the 16th, and we did see some volatility. But yet, look how we concluded on the weekly time frame. Okay, so we're going to continue to hold out into the market for Calera. Right now, we can see this market, we're up 10.6% so far into the market in Calera. We would definitely let this go. We came close, you know, last week, just seeing the market come in and hit that $17, $18 area. Based off what we have so far, we're still anticipating the market in Calera to hit that area. We would definitely let that go once we see the market tag out around $18. So we're going to hold that there just a little while longer. The next one is Applied Genetic Technologies. You guys can see we're up about 33.4%. AGTC is the ticker symbol. And here we are. The market actually exceeded our expectations in Applied Genetics. It has ultimately broken out of our ultimate TP price. Now we're trading around $7. So seeing how we have exceeded our expectations into the market for Applied Genetics, we're going to go ahead and let this one go in the market. Okay, so we're going to let Applied Genetics go. Okay, the next one that we're going to look at is UBS. We're currently seeing the market, we're up about 5% right now into the market in UBS. Let's go ahead and check that out. Looking at this on the weekly time frame, I think we played this on the monthly. Let's go ahead and switch this over to the monthly. And again, the market strength is still here in UBS. We would TP the market right there around $17.50, ultimately around 20 in the long term. So there's nothing to address there into the market for UBS. The next one is going to be Bernardo Realty. Let's go ahead and look at this position. You all can see here that the market in Bernardo Realty is still giving us some weakness, albeit it is not that weak. We had earnings last week on the 16th of February, and the market didn't react negatively. It didn't react positively to it neither. So we're still going to hold out into the market for Bernardo Realty. A lot is not really going on. The market is just trading sideways, so nothing to address there. The next one that we're going to look at is EQT. Let's go ahead and check them out real quick. And here we are looking at the market on the weekly time frame for EQT. The market really is not giving us a lot of weakness. It's still giving us more strength. We have to go through this whole process right here before we really see the market break out in EQT. All right. But what has been going on into the market in EQT over the last couple of trading days simply lets us know that the strength is still apparent. So we're still looking for the market in EQT to continue to see higher price. No changes there. Now, real quick, we're going to look at AQME right there. AKAM is the ticker symbol. Let's go ahead and check them out. You guys can see here that we did endure a lot of weakness in the market for AQME. A lot of weakness came in the last couple of weeks, right? We may have to go ahead and let this one go as a loss because the weakness definitely is apparent on the 3-week time frame. What about on the monthly time frame? I'm still seeing weakness here as well. So we will definitely have to let this particular trade go. We're going to let that go today on this portfolio review. And then we're going to show you all the one that we're going to add to our portfolio. But first, let's go ahead and get rid of these in the market for so let's go ahead and take, we said we was going to take off AQME. Let's go ahead and take this one off, get rid of it. Go ahead and take this one off at a loss. That was about a loss of 7.17%. Okay, we're gonna go ahead and take that one away. And we're also going to take Applied Genetic Technologies out the market. Get rid of that one. And now this is our current simulated portfolio. You all can see right here that we have 2 that are down and 3 that are up. Let's go ahead and add this other one, which is, let's go ahead and take this chart off, and AGTC. We want to go ahead and remove that one as well. And now let's pay attention to this new biotech stock we're going to add to our simulated portfolio, which is Aveo. You guys can see right here that the market in Aveo has been trending real low. You know, the price has been hovering right there above $4, $5, give or take. And we've been finding the market coming as high as $42 back in 2017. So let's speak on why we're going to add this particular stock to our portfolio. You guys can see initially the market in Aveo has just been trading within a range on a monthly basis. We've just seen this market really hold this trading range. It hasn't broken out. It hasn't broken down. It's simply trading sideways, which lets us know that this market is building its next movement. Okay. Now looking at this on a 3 weeks time frame, you guys can see even here that the market in Aveo has broken a trend. Like we have started an upward pattern. The market also is holding support around $8, crucial in order for us to see price movement go higher in price. Now we're not saying that Aveo is going to continue to break out and go all the way up there towards $40, $50. No, not at all. The only thing that we can really tell is that the market may try to hit some restriction, some selling around $10 to $11, which is about, in profitability, market hitting $10 is still about 13% market movement. You know, it's still pretty good to see that profitability come through in the market for Aveo. We're going to need to see the trap hold price right here around $8, which is very probable, no lower than $6. Okay, so we're in position. This is the reason why we're going to add Aveo to our simulated portfolio. Bring this over. I'm going to play this on the weekly time frame, excuse me. And here it is. So let's go ahead and add Avail Pharmaceuticals to the portfolio. And as always, we do 5 simulated shares. At the price $8.91, you guys can see that was the close on Friday. And we're adding it today. That's it. So we have a total of about 6 stocks in the simulated portfolio. There are still plays. The one that we're going to continue to watch is Venado Realty for the most part. That is the one that has given us the most weakness thus far. And on a detailed basis, you guys can see, let me add this metric to it. The gains since we've added these particular stocks to our portfolio, which is right here. So we're up 4 out of the 5 stocks that are in our portfolio. Only one that is down is Venado Realty. We need to watch that one. Everything else pretty much still is in play to continue to see some higher price movement. And as we do our next portfolio review on the next weekend coming up, we'll see how the market has traded against these stocks there. That's it. We're in position. We're in play. This is our simulated portfolio. You guys can see how we are able to predict and add these particular stocks to our portfolio, just so you can visually see that you can also do the same thing. Questions, comments, let us know. Make sure you maintain a profitability and trade different.